Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about if the United States is entering a recession, if we're going to experience a bear market in stocks or a full-on stock market crash, and after we go over the evidence for or against a recession and or stock market crash, we're also going to take a look at the top 7 stocks to buy during a recession or a stock market crash, which is going to prevent your portfolio from losing any money, and it could actually make your portfolio appreciate during times of uncertainty. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below if you think the US stock market is going to crash or if the United States economy is going to go into a recession, and without further ado, let's jump right into today's video. So our first line of evidence against a recession is going to be that billionaires and very credible investors are not pulling their money out of the stock market, and they're actually pouring more money into the stock market and the overall economy. Some investors, though, are wondering if the Federal Reserve increasing interest rates to combat inflation will trigger a recession, mainly because we are already in a very volatile economic, macroeconomic, and unstable stock market right now. So let's see what Insider has to say about this. So if you didn't know, the Federal Reserve is increasing their interest rates to combat inflation, which should work, but it's also going to lower economic growth, which means a lot of growth stocks and growth companies are going to take a gigantic hit in the stock market, and some of this has already been priced in due to the majority of growth stocks falling as of late. So how is the Federal Reserve going to increase interest rates without triggering a full-on recession? Well, they have to be very careful, and they have to do somewhat of a balancing act, because they don't want to increase interest rates too much, because then they'll shock the economy right into a recession, thus crashing the stock market and various growth stocks. However, on the other hand, if they are not aggressive enough, it's not going to do anything, and it's not going to stop inflation. So the Federal Reserve is going to have to be very careful. Another problem that we're facing is that long-dated bonds offer a huge buffer of safety for risk-averse investors. So if we're looking at the 20-year or 30-year bond rates, they actually look relatively attractive, and this is a reason why investors are actually taking money out of the stock market and putting it into bonds, because it's a lot safer. The article also says that although the Federal Reserve is going to increase interest rates 8 times, which is going to cause more volatility in the economy and the overall stock market, it's not necessarily going to trigger a recession. So right now, Insider, as well as a multitude of billionaire investors, are saying that we are not going to enter a recession, that the stock market is going to recover, and that investors should continue to invest into the overall stock markets, and at a minimum, at least be invested into bonds. So that is the bullish news, which says that we are not going to enter a recession. Now, on the other hand, let's look at some other data that could indicate that we are headed for a recession. The first problem with this is going to be inflation, and that's what we really want to hone in on, because inflation has been at one of its highest rates that it's ever been in the last 4 decades. The author of this article said it wouldn't shock him to see as much as double-digit inflation, and right now the inflation numbers came in at around 7.9%, and ideally the Federal Reserve tries to keep it at around or close to 2%. So clearly we are experiencing much higher than normal inflation, which could trigger a recession. So in the visual aid below, we're actually going to highlight every instance in which a recession happened due to an inflationary spike of around 5% or more. And as you can see from this visual aid, we have a multitude of different instances where this has actually happened. So circled in red are the inflation spikes, and following it you can clearly see that the United States economy entered into a recession. Almost every time inflation spikes above 5%, we can see a recession following this. However, there are other indicators on this chart that had a recession regardless of inflation. However, the ones circled in red clearly illustrate that inflation does contribute to an overall economic recession. So this goes to show us that each time inflation was above 5%, there was either a recession right before, during, or shortly after that happened. So this is not good news. This is actually very bearish and negative news. However, hopefully this particular spike of inflation of 7.9% can be an exception to this overall rule, but we're going to actually have to find out about that. However, knowing this data, it really does not look that good. Also, I want to say that recessions are obviously bad for the majority of people because people end up losing their jobs. And if we look at unemployment rates, they actually coincide with recessions. So again, if you look on screen regarding this visual aid, you can see that anytime we had a high unemployment, it was during a recession. Now, there is a problem here because we don't know whether the recession either led to unemployment or unemployment created the recession. So there's going to be some controversy here because clearly correlation is not causation. We want to know what causes this. However, we should keep this in our memory banks. However, the good news, particularly for this market, is that we have an extraordinarily strong job market right now, according to this graph. There are millions of open job opportunities right now, and it's the highest it's ever been in decades. So this is overall really good to see, and this could actually prevent a recession in some instances. Because during recessions, we see the opposite of this, of people losing their job and the job market not performing very well. However, right now the job market looks to be very, very strong, and this is overall a very good sign. However, even with that being said, obviously the job market and job opportunities could change in an instant. So we really don't want to bet on this particular metric to determine if we are going to enter a recession. Also, I want to talk about how a recession relates to the overall stock market. So normally when a recession happens, the stock market falls anywhere between 10% all the way up to 86%. And if you look on screen, you can see the recession timelines and how that actually impacted the overall stock market. However, for me personally, regardless about what the stock market is doing, in times of uncertainty, clearly I'm going to lower margin, and if you're not trading on margin, that is going to be your actual ideal opportunity just to continue to dollar cost average and invest every day, week, or month into the indices or even ETFs such as MTUM and VTI. Because some of the greatest crashes are actually the best buying opportunities, which is why next we're going to look at the top stocks to buy during a potential stock market crash and or recession. These are going to be more defensive stocks, so your portfolio won't fall as much as it could, and these stocks could actually even bring you gains in a time of stock market volatility. So for me, regardless about what's happening in the overall macroeconomic environment, I am going to continue to dollar cost average into my high conviction plays. I'm going to continue to invest into blue chip dividend stocks, and I'm also going to pour my money as much as possible by dollar cost averaging into ETFs, especially during times of uncertainty and doubt, because that's where I actually make the most money over the long term. So luckily for us, this article highlights 7 of the best stocks to buy that are defensive stocks that have actually outperformed the overall stock market, specifically in the crash of 2008 and in the recession of 2020. So these recession-resistant stocks and defensive stocks are going to be great additions to add to your portfolio, and if you already own these stocks, adding more of these might be a good idea. So the first one is going to be Netflix, ticker symbol NFLX, and by Americans cutting back on pricier entertainment options, Netflix seems to be the go-to, because instead of going out on vacations or buying experiences, people tend to go and stay inside during recessions and spend their money on digital services such as streaming services. So Netflix is going to be a fantastic buy, and it actually performed very well during 2008 and 2020. Right now, CFRA has a buy rating for the NFLX stock with a Netflix stock price target of $525, which is a huge increase because right now the stock is currently trading at only $340 per share. So even regardless about a recession or a stock market crash, this is just a good buying opportunity overall. Next, we're going to talk about Target, which is a retailer that normally outperforms during times of stock market and economic volatility, and Target's ticker symbol is TGT. And investors should view Target as a good defensive as well as a good long-term stock to hold. Right now, analysts say that this stock is a clear buying opportunity right now because the price target according to CFRA is $288, while the current stock price trades for around $206. And because Target does relatively well during times of an economic recession, this is going to be an overall very good hold. I also want to talk about how a co-opetition approach of investing is also going to be a good idea, especially during times of a stock market recession. And this basically means that if two companies are a competitor to one another, you would want to invest into both companies. If you invest into Coke, you would also want to invest into Pepsi. If you are invested into Visa, you would also want to put your money into MasterCard. If you're going to buy Target, you also want to buy Walmart, ticker symbol WMT, and this is a discount retailer that thrives during economic downtrends. And they are strategic strategically positioned to do very well because they have fantastic supply chains and they are also investing into their e-commerce, their technology, automation, and various other services, which is really going to benefit long-term stockholders. Right now, CFRA says that the Walmart stock is a clear buying opportunity with a price target of $165, which is above their current stock price target of $142. The next stock on this list is going to be Lowe's, ticker symbol LOW, and this is a company that sells materials mainly for construction or home improvement projects. They also have a very good supply chain, which makes them have a fantastic competitive advantage over a lot of their competition, especially during a time where we find many bottlenecks in supply chains, which has made their competitors increase their price for their products, while Lowe's still can have very competitive rates for what they're selling. Right now, CFRA has a buy rating for this company and a price target of $275 for their LOW stock, with the current stock price hovering around $222. And because we are implementing a co-optation investing approach during the stock market downtrend, that would mean we would also want to buy Home Depot. And Home Depot is basically very similar to Lowe's. They both operate in home improvement, and they both do very well during recessions and even lockdowns. According to CFRA, Home Depot, which is ticker symbol HD, currently has a price target of $395, and it currently trades for around $316 per share. Next up, we have Abbott Laboratories, ticker symbol ABT, and this is a giant healthcare company that sells healthcare products. They are a very diversified business because they have a plethora of different products and revenue streams. They have a very solid and foundational balance sheet, and they also have a fantastic dividend, in my opinion, which makes them a very safe stock to own. CFRA, of course, has a buy rating for this company with a price target of $140, and the current stock price for ABT stock only trades for around $114 right now, again being a fantastic buying opportunity. Lastly, the last stock we're going to talk about is NextEra Energy, ticker symbol NEE, and this is a utilities holding company, and the reason why this is a great defensive investment is because oftentimes utility companies have great stability in times of economic uncertainty, because mainly utility companies have very stable and predictable demand and very good cash flows on top of a pretty good dividend most of the time. Another good thing is that there is a high barrier to entry, which limits their overall competition, and for this reason, CFRA has a buy rating on this stock with a price target of $90, and currently the NEE stock trades at around $80 per share. So overall, these are fantastic companies to own, and even if the stock market crashes and we enter into a giant bear market on top of an economic recession, buying good companies, not taking on too much risk by not leveraging your investments and actually reducing your leverage during these times, investing into blue chip dividend value stocks, and dollar cost averaging into indices or ETFs like MTUM and VTI are going to be your best bet, regardless if we have a stock market crash and or a recession. So with that being said, I would love to hear your comments down below. Remember to smash the like button right now, subscribe if you are new, comment your thoughts, and I will see you in the next YT video.